Hello and welcome to another episode of Full Court Finance here at Zacks. I'm your host, Ben Rains. And today we're taking a look at three soaring, highly ranked stocks to consider buying for both strong growth and really impressive value, even though all three of these stocks are trading right near their all-time highs. And the three stocks we're looking at today are Stride, which trades in the ticker LRN, KB Home, which is KBH, and Bluebird, which is BLBD. But before we get into everything, remember to subscribe and leave a review wherever you listen to your podcast, and make sure to check out our Zacks.com/promo page for a look into some of our services, portfolios, and more. All right, so before we jump into these three stocks, I just want to quickly do a broader market overview just to give a better sense of where we are at the moment, and then possibly why we're looking at these stocks that are presenting both impressive stock price performance recently and over the long term, but also trading at really impressive valuations as the market gets a little bit bloated possibly. So the NASDAQ dipped about 1.1% midweek, sending it below that 50-day moving average ahead of that big release that everyone was paying attention to, which was NVIDIA. I'm recording this on Thursday, midday Thursday, and NVIDIA was down around 4%. So nothing crazy considering how quickly it's rebounded off those recent lows and just the insane run it's been over the last year plus. So big tech is continuing to kind of float above the rest of the economy, driven by that AI arms race. Meanwhile, we saw Dollar General tumble after its report on Thursday morning. This came after Abercrombie & Fitch had a big tumble on Wednesday as they pointed to a, quote, increasingly uncertain environment for the clothing retailer. So it's just showing that despite the Fed starting to cut rates in September, inflation is hurting lots of consumers across the board. Lululemon is going to report after the closing bell today. Their stock's already down 50% year to date. So it's not the best environment for the retail sector, but it's possible that as we see all these stocks maybe bottoming out sooner than later, so maybe the retailers start to finally see some buying activity after these massive downturns. But it's worth noting just the divergence we've seen from all of these big tech names as they continue to grow their bottom line, with the contrast to, say, Dollar General, now Abercrombie & Fitch tanking after earnings, and possibly Lululemon again. So it's just worth noting where we are heading into the start of interest rate cuts. As I said, Jay Powell and the Fed are committed to that, even though the S&P 500 is trading near all-time highs. So as we record this, the NASDAQ was back up about 1.2% on Thursday to retake that 50-day moving average. So the bulls are holding that line for the tech-driven index. So that's just kind of where the market is at the moment. We could see more choppiness and possibly more near-term selling, but the bullish case remains with interest rate cuts around the corner and overall earnings growth really strong, driven by big tech. So with that in mind, though, we're going to take a look at three stocks that are soaring to new highs while also presenting really impressive value that investors might want to consider buying right now as we head into September. So the first of those three stocks is Stride, which trades in the ticker LRN. So the stock has soared nearly 100% in the past year and 350% in the past 10 years, yet it's trading near its lowest forward earnings multiple in the last decade. So let's dive into the stock. So the basics are Stride's a digital education services company that attracts students of really all ages in the US and globally. Its growing portfolio serves K through 12 students, parents, adult learners, school districts, businesses, the military, and beyond. It's expanding as more people dive into digital education and then also reevaluate college amid skyrocketing costs. Stride's also gaining steam in its career learning segment for middle school and high school cohort. So possibly people considering advancing before maybe going to a trade school or just going right from college to the job world, which even companies like Google and Meta are requiring college degrees for certain jobs, which they might have maybe 10 years ago. On top of that, the firm's capitalizing on the digitalization of the U.S. economy. It's offering courses such as med certs to help people land new careers in healthcare or IT, tech elevators, which boast that it can help students become a skilled coder in 14 weeks. So this is kind of the background for the business. Stride grew its revenue from roughly $400 million back in 2010 to $1.84 billion in 2023. Sales then climbed 9% last year, so 2023, 10% in 2022, after soaring 50% in 2021 when the COVID pandemic kind of reshaped education and closed a lot of schools for that year. Stride then grew its fiscal 2024 sales by another 11%, posting a beat and raise fourth quarter in early August. The company grew its adjusted earnings by 58% in FY 2024. So as I said, that's the year they reported in early August, with overall revenues up 11%, in total career learning up about 6.4%, with general education, which is a bulk of its business, up about 14%. And then the career learning for the middle school / high school cohort was up 11%. So significant growth there in all three of those segments. And then looking ahead, we're calling for another roughly 6% growth both in 2025 and 2026, to go from about $2 billion in 2024 to $2.3 billion in 2026. And then on the bottom line, we're calling for roughly 8% adjusted earnings growth this year, and then another 12% adjusted earnings growth next year after that big bottom line growth this past year. And the company's earnings revisions are trending upward after its most recent release, which helps since they kind of had stagnated recently after soaring for a big portion of the last year plus. Still, the recent positivity helps it land a Zacks rank number 2 buy at the moment. And overall, now the stock is up about 140% in the last 3 years. This blows away the Zacks School Industries 11% decline and the S&P 500's 22% jump. It's up about 100% in the last year and 35% in the past 6 months. The online education standout is also not just a post-COVID success story. It's up 350% in the past decade, crushing the S&P 500's 190% run and its industry's 23% climb. It's currently trading right near its all-time highs, so it's trading above its 21-day moving average and at RSI levels that are above neutral but solidly below some of the overheated levels they were earlier this year. And its improving earnings outlook helps Learn trade near all-time lows at 15.9 times forward 12-month earnings. It's trading at a 73% discount to its highs over the last decade, 35% below its 10-year median, and 20% below its highly ranked industry, even though it's crushed it over the last decade. So that's really impressive for Stride. And then if we look overall, the 6 brokerage recommendations that Zacks has, 4 of them are coming in at strong buys, with 2 holds. So Wall Street's pretty high in the stock, and it's currently trading 5% below its average Zacks price target. So before we move on to the next stock, the basic bull case here is that Stride is growing its reach through expanded offerings in the rapidly evolving world of education, where more people are turning to digital education across different ages and demographics for a variety of skills. And now might be time for investors to consider buying that stock and holding it for the long haul, since it also has a really sturdy balance sheet. And now we're going to move on to KB Home, which trades on the ticker KBH. The stock has climbed 65% in the last year and roughly 400% in the past 10 years to trade at fresh highs, yet its valuation is stellar. So let's dive into a little bit of the company and then what else it's done recently. So KB Home is one of the largest home builders in the U.S., with it currently operating in nearly 50 markets across the country, mostly in highly desirable areas within states such as Arizona, Texas, California, Nevada, Washington, Colorado, and beyond. The company allows buyers to customize many aspects of their home. It's also committed to more energy-efficient offerings. The firm boasts that it's the first builder to make every home an Energy Star certified home. The Los Angeles-based company benefited from the COVID housing boom that was driven by ultra-low interest rates, demographic changes, and many other factors. And that saw its revenue soar 37% in 2021, and then another 21% in 2022 before slipping 7% in 2023. So overall, that was that booming COVID period, yet the stock is still going up and up and up as their longer-term outlook remains boosted by the fact that millennials are driving the housing market. They're a huge demographic, and baby boomers are finally retiring and moving. And more importantly, home builders didn't overbuild during the COVID boom like they did during the last housing boom. So demand is still way below overall supply. and mortgage rates are going to start to come down once the Fed starts cutting rates. So that's kind of the overall market for the housing market and why these stocks have remained strong despite the market cooling overall, is that they're able to raise their prices and there's still just not enough homes for people that want homes out there. So their most recent quarter, Q2 of 2024, their net orders were up about 2%. Net order value expanded 7%. So their homes delivered were down slightly year over year to about 3,500 versus roughly 3,700 the year before. But their average selling price increased to about 483,000 from 479,000 the year before. Their CEO said, quote, buyers remained resilient in their desire for home ownership despite the volatility in mortgage interest rates. Our pace of monthly net orders per community was one of our highest second quarter levels in many years, which we believe reflected the compelling personalized choice that our built-to-order model offers to meet each buyer's lifestyle and budget. The company topped our estimate by 21% in the second quarter for its fourth straight beat, averaging around 18% on the bottom line. So beating on the bottom line, which is really impressive. So looking forward, we're calling for roughly 7% revenue growth this year, and then another 8% revenue growth next year, as it shows the housing market remains strong and they're able to keep their costs high. And then in the bottom line, we're calling for 19% adjusted earnings growth this year and then 7% adjusted earnings growth next year. And overall, its earnings revisions have just trended higher and higher and higher over the last several years. And they have trended higher since that last report as well, to help it land a Zacks rank number 2 buy at the moment. And then overall, if we look over the last year, its FY 2025 earnings estimates up 20%, with its 2024 estimate up about 22%. So that's really strong growth and just shows the resilience of this market. KB Home stock has climbed 65% last year and 400% in the past decade, as I mentioned off the top. This run roughly matches its highly ranked industry, which is also up 95% in the past 5 years. So the stock's up 95% in the past 5 years. And that building products / home builders industry for Zacks is sitting in the top 8% of 250 Zacks industries at the moment. So it just shows how strong the overall industry is, which helps KB Home benefit from kind of a rising tide lifting all boats there. Overall, it's trading just below its all-time highs after getting rejected right at its all-time highs recently. It's pulled back to roughly neutral RSI levels, and it's possibly trending down to its 21-day moving average. It does trade solidly above its 21-week moving average, so there could be some more near-term selling pressure, but the stock offers a solid dividend. The dividend yields about 1.2%, so nothing amazing there, but it has a really impressive payout ratio of just 13%, so there's plenty of room for growth there. It's also trading at a 40% discount to its 10-year highs, even though it's right below its all-time highs in terms of price and near its median. And it's also trading at an 18% discount compared to its highly ranked industry, despite roughly matching it almost exactly over the last 10 years. So it's trading at 9.4 times forward 12-month earnings versus its industry, which is really impressive. So overall, KB Home worth considering at the moment and as a longer-term play, considering the demographics and the fact that there are just not enough homes out there for all the people that want to buy them, and interest rates are going to start coming down, which is going to help mortgage rates, and more people will then probably start flooding back into the housing market. And now we're going to close out with a company called Bluebird, which trades in ticker BLBD. Its shares have also skyrocketed. They're up about 330% in the past 2 years and 420% in the last decade. Yet they're trading near their 10-year median in terms of forward earnings and miles below their high. So that's kind of the bull case for all three of these stocks. The stocks are soaring, trading near their all-time highs, but their valuation is really impressive. So Bluebird is a relatively historic maker of school buses, and it's been in business for roughly 100 years. Bluebird has pushed forward into new areas of the automotive world, including alternative fuel, EV buses. The firm is now a leader in low and zero emission school buses with more than 20,000 propane, natural gas, and electric powered buses in operation today. Bluebird has roared back in a big way after COVID crushed its business. So the company posted 17% revenue growth in 2022 and then 42% expansion in its fiscal 2023. The company posted blowout Q3 2024 earnings results in early August, and it said that demand for school buses continues to grow. Its CEO said, quote, improving operations, driving new orders, and expanding our leadership in alternative-powered buses helps the market demand remain very strong with over 2,500 units in our backlog. So that's where it stands. Most recently, it's also benefiting from the U.S. government push to transition more public school buses to EV buses and other non-fossil fuel offerings. Blue Bird said on August 27th that it had delivered its 2,000th electric/zero emission school bus, marking an industry-leading milestone. The company crushed our bottom line estimate last quarter by 82%. For its fourth straight huge beat, it's now beat by an average of 96% in the trailing 4 quarters on the bottom line. So that's really impressive. And it's trending much higher in terms of its upward earnings revisions. So since its report, its FY 2024 estimate is up 24%, with its 2025 estimate up 28%. So it's now trending heavily back in the right direction as part of a impressive year-long run for its upward earnings revisions. This helps it land a Zacks rank number 1 strong buy at the moment for Blue Bird stock. And if we look overall, we're calling for 18% revenue growth this year and another 12% revenue growth next year. And on top of that, we're calling for 216% growth on the bottom line from $1.07 all the way up to $3.38. And then another 10% growth on the bottom line in its next fiscal year. So that's really strong growth there for Blue Bird. And its shares have skyrocketed, as I sort of mentioned at the top. Now we're going to talk about just the last 12 months. It's up 135% in the last 12 months and 90% year to date. This is part of a roughly 420% run in the last 10 years, crushing the auto tires truck sectors, 8% climb, and the S&P 500's 190% run. It has cooled off a bit recently, and it's attempting to find support at its 21-week moving average after chopping roughly sideways over the last several months, which is a positive sign for the stock. It's now right back above its 21-day and 50-day moving averages as I record this on Thursday afternoon, and yet Blue Bird's booming earnings outlook has it trading near its 10-year median and 85% below its highs. It's trading at 14.3 times forward 12-month earnings, which is also a 10% discount to its auto tires trucks sector, which is trading at 15.7 times forward earnings. So really strong stuff on the valuation side for Blue Bird as well, and it's trading at a 15% discount to its average Zacks price target. And Wall Street is very high on the stock, with 6 of the 7 brokerage recommendations that Zacks has coming in at strong buys. So Blue Bird is another one of these soaring stocks with great value and a high Zacks rank to consider buying as we head into September. So that does it for this episode of Full Court Finance. Until next time, I'm your host, Ben Rains. And remember, if you have any questions, please feel free to shoot us an email over at podcast@zacks.com.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.